First, it's a project that is dedicated towards exports. Not only is it dedicated towards exports, it is going to diversify our export base. The bulk of our exports come from one particular sector. But if you look at the development of countries, emerging markets, that have built up their export bases, the successful and the sustainable ones are those that have along the way diversified their export base. So I congratulate you not only for exporting, but also diversifying our export base. Number two, this is a good example of what Pakistan has been missing in when you look across countries, which is participating in international value chains. If you look at the Southeast Asia development model, it is full of examples where domestic players in partnership with foreign investors, big players, partner together to become part of the global value chain, which means that they import some raw material, in this case it is rubber, they do a lot of value added domestically, they reach the highest international standards, and then are able to compete globally and are able to export their products. The history and the economic journey of Southeast Asia is littered with examples of countries that are part of global value chains. Pakistan has been missing in this area, and I congratulate service industries for showing us the way that Pakistan can become part of global value chains as well. Now, I want to talk about the role of the central bank in this project, and one reason why I think I am here today to talk about this inauguration, which is that we are delighted that Service Long March benefited from one particular scheme that the Central Bank of Pakistan gave during COVID to jumpstart investment in the country, and that is a scheme called TERF, Temporary Economic Refinance Facility. Back in March of 2020, this country, as the rest of the world, was in the grip of a deep fear, and that fear was the fear of a virus that at that point was showing no signs of abating. And all the businessmen, I could see fear in their eyes. They were all worried about their orders being cancelled. And in the central bank, we began to think that if not only their orders are being cancelled, but their investment plans are going to be postponed, then the recession in Pakistan is going to be very deep, it's going to be very long-lived. So we have to try to come up with some kind of an incentive that investors do not delay their capital investment, and that led to the birth of the scheme called TERF. TERF's central proposition was the following, that for 1 year, the Central Bank of Pakistan will give the needed funding to commercial banks on very attractive terms, and for 1 year, if a business decides to take advantage of this, it will be able to get this concessionary financing at a maximum interest rate of 5% fixed for 10 years. Our goal was, we do not want to interfere in the decision of a businessman on whether or not to invest, but we can offer a time-bound incentive such that if they do not delay their investment decision, they will get to benefit from this. So it being time-bound was a key part of it, and it expired in March of last year. Another key aspect of TERF was that the government and the Central Bank of Pakistan were completely removed from the credit decision, from the decision of who will get the money. All the Central Bank of Pakistan did was told banks, based upon their own asset quality and capital indicators, this is your limit in billions of rupees. You can lend this at a maximum rate of 5%, less if you want, but maximum 5%. But you have to lend to a party where you feel confident that you will be repaid in full and on time. And we as a central bank will hold your feet to the fire as a commercial bank to make the right credit decision. So number one, the central bank provided the money at a time when nobody wanted to put in money because everybody was afraid. Number two, the central bank made it time-bound, that this is not going to last forever. It's your decision, but if you want to delay, this opportunity will not come again. And third, the central bank said, the credit decision is the bank's, but we will provide the financing that is needed. So I am very glad that SLM, Service Long March, is one of the companies today in front of you. It took around $50 million of turf. And as Umar showed you, they are expecting to reach annual exports of $300 million. So, this is money well spent if giving a certain amount produces a multiple of annual exports for the country. I want to also mention that turf had two other key features. Number one, in Pakistan, one often gets told that, well, we have one particular sector which is textile, and whenever the government does anything, it is for the benefit of this major sector. I am very happy to share with you that 60% of the total amount that was approved in turf is for non-textile sector. My point is that we welcome exports of textiles, but as I was saying earlier, we need to diversify. Not only is 60% in non-textiles, as Umar was mentioning, it is equally helpful as a central bank to promote import substitution. Because at the end of the day, if it's $1 exported or $1 saved in your import bill, it helps us in the balance of payments. So we are very happy to see that not only did turf finance projects for exports, it has also financed projects for import substitution. Another aspect of turf that I want to mention, to date, 435 billion rupees were approved in turf, out of which 312 billion have already been disbursed. Another point that is often raised is that, well, in Pakistan's history, it's only the big guys that get all the money. And I want to share with you some statistics about the fact that turf was a scheme in which the middle guys also benefited. I told you that service is an example of a big player, and there is nothing wrong with big players. They are welcome. But at the same time, as a central bank, we need to keep an eye on that the middle market doesn't get left behind. So ladies and gentlemen, I'm very happy to share with you that 50% of the beneficiaries of turf, half the beneficiaries of turf, had a loan size of 200 million rupees or less. That is a fraction of the loan that service took advantage. 50% had a loan size of 200 million or less. 70% of the beneficiaries of turf had a loan size of 500 million rupees or less. So it gives us great happiness that not only are the leading big industrial groups of Pakistan benefiting from this scheme, but also the bulk of it by number of borrowers is actually going to the middle market, and we are doing our role in looking at the equity of distribution of resources as well. I want to end by simply reminding our audience that Pakistan is a country whose export potential is unlimited. For various factors in our history, we have not been able to fully utilize the potential that this country represents. It is the vision of the Central Bank of Pakistan to promote price stability, financial stability, and growth in the country. Our scheme turf and examples like these today are evidence in front of you that when policies come together well and in a timely manner, this country can and will realize the potential that it deserves and that it correctly aspires to. Thank you very much.